Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today we again will take a look at the euro currency. Yes, the Fed statement has brought some adjustments to overall picture on the euro currency, but our setup bullish patterns that we have on the weekly chart are still valid. That's why it's a bit early to speak about final absolute failure of the bullish chances, and that's a bit too early, because we probably will forget about any north direction only if market will drop below 108. But until market stands inside of this most recent swing, the chances to the upside continuation still exist. Maybe they will not be too significant, maybe market will show just a bit more extended retracement to the upside, but chance is still there, and we will prepare the update to our recent analysis since the situation slightly has changed. At the same time, guys, despite that markets mostly expect the rate hiking in September, we will see some signs that this rate hiking will not take the shape of the cycle. We will see the month by month increasing of the rate in the United States, and this also relatively has been confirmed in the recent statement when the speech of the Miss Yellen mostly has some notes of possible more that the Fed a bit more worries on to not chill out the fragile growth of the economy rather than inflation. So the major object to keep is the growth of the economy, but not to struggle against the inflation. And also we see that in the United States the companies do not develop their investment programs. They do not put the money in the developing, and then do not increase the investment expenses. So that points on some artificial growth of the economy, and we think that this could lead and could become as a result, this could be not so stable growth of the United States dollar. It could be short term, and it really could be very choppy action. So we will put more analysis in our weekly research, where we will talk about this with more detail. So it promised to be very interesting weekly research in the coming weekend. So we call you to read this research. It probably will contain a lot of interesting information concerning the perspective of the rate hiking, what it will be, what's American equity markets right now, what is the European market. So it will just shed some light on the perspective of the rate hiking. So meantime, in the short-term perspective, we see that market has dropped lower yesterday. On the daily chart, picture hasn't changed significantly. Trend is still bullish here. Market still stands above the major level. Some very strong support. So guard this triple to buy is valid. Weekly bullish grabber is valid. So from that standpoint, the setup that we have on the weekly chart is still valid. So and it means that chances on upward continuation still exist. Right now, if we'll take a look at the 4-hour time frame chart, we'll see that market has moved below confidence support that we have here very, very fast. So this was plunged down, and we said that if you will see the action something of that sort, do not take those long position. As you can see, market has dropped below this ABCD, has accelerated lower, moved below the confidence support. So now market is approaching to the next support area. That probably will be the last one. Strong support that could keep the market and to keep the chance on upward action. This is also very strong support area. This is weekly pivot point. It hasn't been tested yet. by the way, guys. So market is touching this level first time within the week. There's also major fib support, 618 major fib support, 109.30. And guys, this will be also some kind of the agreement. So we have the same ABC top D pattern, but this will be 1618 extension. So that will be an agreement around major fib support and weekly pivot point. Very strong support area. Trend right now is bearish on the 4-hour time frame chart. And here, guys, we probably, to avoid any more problems, it makes sense maybe to use some kind of the Jordan entry technique that calls as the Minesweeper A. Previously we have explained this technique. It's very useful tool. The major idea of this technique that you do not enter the market until it won't show the respect of the current support. So if market just will move through this level, you will not get the chances to take the position. So the technique assumes that you should not take the blindly position right in this area, but wait the response of this support. How it works? So we should use not the 4-hour time frame chart, but hourly chart, because Jordan use as the next to the daily one is the hourly time frame. But I just want to explain you how it will work. Okay, let's shift to the hourly chart. Anyway, just let's add MACD since this trend indicator. So what we should watch for? First of all, we need to see when the market will hit the support area. To hit support, it means that it should reach the target, it should reach the fib level and weekly pivot point. After that, we need to see when the market will start move up on the hourly chart, and what is more significant, simultaneously trend on the hourly chart should shift bullish. So market has to confirm respect to the support area with the upward direction and shifting hourly trend direction to the bullish side. After that, when this will happen, for example, let's assume that market has touched the support and starts move up. Okay. As a respect, trend has shifted bullish here, for example. After that, we need to enter on the first retracement on this bounce swing. So here we have levels of this bounce out from the level. So we need to take the position on the first retracement, small retracement. You could place stop either below the 618 level or even below these lows that has been formed when the market will reach this support area. That's the idea of the Minesweeper technique, entry technique. This is very, very useful tool, because if market will not respect this support, you just will not get the signal for the taking position. And you are entering in the long position only when the market already starts upward action, so respecting of this support area. Besides, the Minesweeper technique allows you to place very tight stop. So for example, if even you will place the stop somewhere below these lows, this will not be a very significant stop, maybe 50 pips at maximum. Or even you could place stop somewhere, for example, below the 618 support area. That probably makes sense to do, since this is the last edge where we could take the long position, because this last strong support area on this swing. And if market will not stop here, it's nothing that will prevent market from the dropping lower will be in this area, because here below this area we will not have any strong supports except maybe weekly pivot support one, but it's not really very impressive support area. And if market will drop through the first confluence, it will drop below the agreement and weekly pivot point. Hardly it will stop somewhere in this area. So that will be the menace of the failure of the bullish patterns. And that's why probably it will mean that market will go lower. That's why here, to avoid any problems, it's probably better to use the Minesweeper technique for taking the long position. So let's see how market will behave. Probably the gross domestic product release that we will get today will be the dominant of the further action till the end of the week.